Okay, Bjorn, if you recall, January 24th, 2017, we signed a heads of agreement to acquire Indee Gold, which is a 420 square kilometre package contiguous with our existing Turner River package. And we were well aware that the sum of the two was greater than the parts. 1 + 1 = 3. And Indee Gold housed gold resources that complemented ours, and the combination of those two projects now sees us with the Pilbara Gold Project at plus 1.2 million ounces of gold. Now today we announced that we have signed the full and final share sale agreement. That's a significant step forward to us because it has confirmed the regulatory processes in China, that the regulators have approved the sale of the transaction. There were some terms that have been adjusted that we believe are very much in our favour, and we thank our Chinese partners for them. Most specifically, we have now paid a $1.5 million deposit. We have extended the payment terms that were going to be 24 July 2018. They're now 24 January 2019, but can be further extended to 24 July 2019. With a smaller payment, and we'll call it minimum fuss. And probably most importantly, the Chinese have agreed that they, on settlement, will take $3 million in equity for us. So from this point, So from this point, our capital requirement, providing there aren't any covenants breached on the way through, our capital requirement is at settlement, it's going to be 15 million less 4.5 million plus a bit of change. So we're down at 30% of the acquisition cost is now covered, and a lot of that perhaps overhang, how do you raise $15 million, is probably now not satisfied, of course not, but it's become more comfortable. Yes, well, it's certainly been a bit of a roller coaster since, I guess, late September, and our shares, this is after we started talking to yourself, of course, Bjorn, but our shares went for a very strong run, and then all they've done is drift back, and we're currently at 12 cents, having hit 38 cents probably late November or thereabouts. And I think that the main player in the conglomerate story has been the Canadian company Novo Resources, and their market capitalisation's come off quite sharply, as has ours. And I think the market expectations on what this could be were probably overheated. There was a significant bulk sample from Novo that I think went 60 grams per tonne in nuggets and 9 grams per tonne in fines. And of course, if you multiply 69 grams a tonne out over some of the areas talked about, you have a lot of gold in that region. I think the reality that is coming to bear is that testing for the gold and the sampling of the exercise is going to be much, much more difficult. And it is going to be somewhat more time consuming. So people would have been liking results now. Novo are leading the way in that regard. I think there's a bit of a backlog in terms of clearances and approvals in certain areas. And I know from our own perspective, we still need to get heritage approval for low-level ground disturbance. We've got applications in, we've got POWs in to do some work, and we'll be getting to work on our Loudens patch as soon as we get that through. Heritage approvals themselves don't normally take long. But I think just getting the right people to do the heritage approval, and as I say, there's probably a backlog. They might be heritage approving in other areas. So that's been frustrating for us. But and look, I think you're going to be interviewing Andy Beckwith next week, our technical director, who's better placed to talk about these programs moving forward than I. But I do know at Loudens patch, we're very comfortable that this conglomerate zone that we have is housing the conglomerate gold, as we know. What we don't know, of course, is what the grade is. It's unlikely that it's going to be the 69 grams a tonne that was part of that initial bulk sample, but do you know what, if it's 10 grams a tonne, it's still a pretty significant deposit, and it's a great start for us for our project. So I think you'll find Andy will talk a bit more detail about that, because he'll have a lot more knowledge and understanding. But we're quite excited about it, and if we can get 10 grams a tonne, you know, again, it is certainly a price-sensitive result for us. Big if, though. We've got to get into it, and we're looking forward to hopefully doing that, you know, let's say starting in March at some stage. As the Conglomerate story was bubbling along, De Grey's position was that we were the de-risked entry into that Conglomerate story, because we had very significant structural shear zone hosted gold already under our belt, and we've been touting 1.2 million ounces for the last, I'm going to say since September, I think the announcement came out. So we have a significant structurally hosted gold project anyway. We've got 160 kilometres of shear zone under our control. It appears to all be carrying mineralisation. It is underexplored both in terms of depth and along the shear zone. There are areas where the shear zone disappears under cover, and that have never been drilled, never really looked at. So we have enormous exploration potential and upside. We have an existing project that we are moving into development studies, into pre-feasibility studies, and associated with that, there will be a lot of exploration activity, both in terms of existing deposits. We'll have to do a bit of infill drilling as well, but we'll be looking to extend some of the existing deposits, and we'll be looking to go out to some of the new target areas, and probably particularly into the southern zones. Since you last spoke to Andy, we've reported back on Tawarana, which is, again, Andy will talk to you more technically about that, but we're very, very happy with the results at Tawarana. That's looking like it's a higher grade deposit than our other open pit deposits, and we think that can go down at depth. And Andy would have spoken at length about Blue Moon, where we recently reported results that showed anomalous gold, but there was no doubt our expectations, the market expectations, were for better initial results. What we're saying is that, look, the load will be there somewhere, in our opinion. These significant nuggets that they've found at Blue Moon have come from somewhere. We just haven't hit it in our first round, and we'll be going back and doing more drilling into Blue Moon as well, with the hope and perhaps anticipation that we'll get the results that we look for. But there's plenty of targets on our existing shear zones anyway, and we fully expect that our 1.2 million ounce resource will move towards 1.5 million ounces and beyond, towards 2 million ounces. It's all a matter of how much money we want to spend in drilling at the moment. Yes, look, we're very conscious that we are presenting ourselves as a gold development story, and we need to be focused on the gold development. We are fortunate that we have a base metals resource already. It's zinc, silver, lead. It's circa 3.7 million tonnes. At last time we reported, I think it was about 8.6% zinc equivalent. Zinc prices have continued to rise, of course, so I'm not sure what that zinc equivalent number is at the moment. But it's a good starter resource. We need to find more resources. It's along a VMS trend that is much longer than where we've found the resources to date. So there's a lot more exploration opportunity there. There's a lot of data that we just haven't had time to look at, but we've had somebody experienced in this area who's been pulling apart our database now, going through it and identifying new targets and where to head. We'll be looking at where we go with that project at the moment. I think we've said that we'll be looking for opportunities perhaps to monetize it. That could be sale, could be joint venture, could be spin-offs, etc., etc. Similarly, we've had some initially good results on the pegmatite trend that we call the King Coal trend. We went back and did some more soil sampling. We haven't released those results yet as well at the moment they should be pending's not quite right, but sometime in the next week or so, I think those soil sample results will come out, and then we'll be working out what we're going to do, with that lithium. Do we go back in and do some more drilling? Does it get spin out, etc., etc.? So we're going through that analysis at the moment, but we're focusing on gold, but neither are we a one-trick pony. And look, one always needs to be careful of making these bold statements, Bjorn, and the market is never wrong, as we know. So, look, I think some of the things that we should get a tick on. Look, we still have the potential of the conglomerate story. We've got our structural gold, but we've got this potentially very significant upside on the conglomerate gold story. So that's one thing. Since we now have money in the bank from a strategic investor in Kirkland Lake, so we're well funded through our next program. So we're not come raise, as they say, we're not about to need capital. We've got 1.2 million ounces in the bank, so to speak, under JORC Resources. We fully expect that to move to 1.5 and beyond. And as we go through pre-feasibility studies, we will convert to reserves, which then, reserves carry a higher value than in-ground resources and recoverable resources, etc., etc. And we've got significant exploration upside. We can't look, exploration upside, people will argue, is a two-edged sword. It costs money to explore, but I think if we had 160 kilometres of shear zone in the Kalgoorlie region, it would probably have 10 companies with market caps of $50 million each running that program and drilling those shear zones. So we're fortunate that we have so many targets under our control, in our land holdings. So, look, what is our market cap? I think our share price was 11.5 or so today. It's hard to say what the price should be, because whilst you can do peer analyses, every company has its slight differences, and a company that's got resources near Kalgoorlie will have a better market cap than a company that's got resources in Port Hedland, because we don't have the luxury of having mills around us and alternative treatment facilities, etc., etc. But I think we also see that as an advantage to us, that we're probably the only company likely to build a mill in the region, in which case you've got that first mover advantage, and whatever other resources in the region probably need to head towards your mill at that point. So, look, yes, I think bottom line, we have a resource, we're well funded, and we've got the upside of the conglomerates, as well as we're not a one-trick pony in that we've got the base metals and the lithium.